What's up, everyone? It's Caddy with Money Vesting. So in this video, we are going to be talking about one of the best performing stocks in the last 20 years. And this is arguably one of the, very well-run companies in the world. And it has outperformed the S&P 500. It's outperformed the NASDAQ. It's even outperformed Apple and Tesla and Nvidia, Enphase, like all the big cap, large cap tech stocks. And some of the best companies that this company has outperformed those stocks, those companies in the last 20 years. So we're going to break this down. I'm going to keep things interesting here. And to do that, I'm not going to reveal which company or stock we're going over. At any point during the video, you can pause the video and you can make your guesses down in the comment section below. So if you have any sort of a guess on which company we're talking about, pause the video, make a guess down in the comments below, and it should be interesting here. So we're going to keep things anonymous a little bit. And hope you guys enjoy this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel, and the link to our Discord and Patreon is going to be down below if you're interested in joining us. There is a 16% discount that is available and valid for a very limited time. We're going to run through all the financials. So we're going to talk about the revenues, the earnings, the cash flows, the valuations, and of course the balance sheet and the intrinsic value, and finally the technicals, and talk a little bit about the company towards the back half of the video as well. So this right here is going to be that price performance for that stock versus the S&P 500. So as you can clearly see that the company that we are talking about today is in orange, and it has returned over a 350,000% return in the last 28 years since 1995. So $1,000 investment in this stock in 1995, a year before I was born, would have yielded you over $3.5 million as of today. And it's the same comparison to S&P 500. It's only up 829%. Apple's up 30,000%. Tesla's up 20,000%. And Nvidia is up 57,000%. But this stock is literally just off the rails. Even if you combine all these stocks together, they're still not able to beat this company. Now, if you take a look at some of these numbers here since 2012, I mean, fantastic growth in revenues and earnings and profitability. One of the things that you guys know from the channel is that I just love these bar graphs and these histograms and how consistent growth is very, very strong. I mean, the predictability is going to be very good if the company is growing revenues just like this, right? From $2 billion to over 5.5. Every single year, they've managed to grow revenues and gross profit from about $1 billion to over $3.1 billion. Once again, at any point during the video, you can pause and make a guess down in the comment section below which company we're talking about. Should be really interesting. I'm kind of excited to read your guys' comment. But operating income, $552 million to over $1.8 billion as of December 2021. So already these numbers should give you an idea that it's not really like a super large company. It's not a company that's, hundreds of billions of dollars or trillions of dollars in market cap. But I would say like it's relatively small or smallish company when it comes to the market cap. Now, this right here is going to be the net income. Once again, fantastic growth. I mean, take a look at these bar graphs, right? I mean, phenomenal. From $340 million, growing that to $1.3 billion. Consistency is the name of the game for this company. And diluted earnings per share growing from 62 cents to over $2.57 per share. And weighted shares outstanding, so diluted weighted shares outstanding going down from 550 million to 535 million shares. So a little bit of a buyback from this company. Free cash flows also growing from $263 million to $877 million for this business. So far we've looked at consistently growing revenues over the last 10 years, gross profit, operating income, net income consistently growing along with free cash flows, and diluted shares outstanding coming down, which is exactly what we like to see, and they are buying back shares. This right here is going to be their profitability grade. So we are looking at 50% in gross profit margins, EBITDA margins sitting at 26-25%, net income margins at almost 20%, meaning that for every $1 in revenue this company generates, 20 cents, almost 20 cents, trickles down to the very bottom line as profit, as net income. And free cash flow margins at 8.8%. We got very good, efficient business with return on equity at 15, actually a little bit over 18%, and return on capital at over 15%, and return on assets at almost 15%. So they are able to really be very, very efficient in the way they do business. And CapEx, take a look at this, less than 3% of their sales. So this is a very, very lean organization that is able to generate a lot of revenue and profit with high margins and return on capital assets and equity with very little investments that they are making in CapEx. phenomenal. This right here is going to be their balance sheet. And just when you thought things could not get any better, it kind of seems like too good to be true. Total cash sitting at $2.65 billion. And guess how much their total liabilities are? Under $1.3 billion. So they can literally pay down all of their liabilities, literally all of their liabilities. I mean, debt is $37 million. That's literally peanuts for this company. But liabilities are so small, they can pay down all of their liabilities just using their cash. Current ratio at over 4.19. Quick ratio when you take inventory out, 3.3. Covered ratio at 73,000. So absolutely insane. And then debt to free cash flow at under 3. This is exactly what we like to look at. This is their actual balance sheet. Again, you can, if you have made any guesses, comment down below. But this right here is their balance sheet as of September 30th, 2022. And you'll notice that cash sitting at 1.3, investments sitting at 1.3 billion, combine that $2.6 billion. And then you got other investments, long-term investments sitting at 72 million. So you combine that together, we're sitting at $2.7 billion. And their total liabilities are sitting at about $1.4 billion. So very, very good balance sheet as well. Now, just when you thought things cannot, I mean, this is like a too good to be true story, right? And unfortunately, it is, because the valuation is high for this business. So we're looking at a 46 times earnings multiple, 45 times on a forward basis, and then price to earnings on a trailing 12 months gap, we're trading at 46.45. Price to sales, we're trading at a little bit over 8, which in my opinion is extremely high, because if you take a look at the sector that they operate in, 1.2 price to sales and a little bit under 20 price to earnings. So they're definitely trading at a premium to the overall sector, at 100% premium to the overall sector. So everything lines up well except for the valuation. Unfortunately, I think the valuation is the only key takeaway from this business that I feel like it's not appropriately priced. It's definitely, in my opinion at least, trading at an overvalued level, considering that the valuation is way too high and price to cash flow at 52 to 66, which is also incredibly, incredibly high for this business. Now, when it comes to the earnings expectations and what the analysts are expecting for this business over the next 4 to 5 years, the EPS estimate for December of 2022, in other words, the entire fiscal year 2022, is expected at $2.31, and that's expected to grow to $4.82 by the year of December 2026, by fiscal year 2026. And if we plug that into our calculator here, at 231 in 2022 to 482 in 2026, that's going to be a compounded annual growth rate of just over 20% for this company, which shall remain anonymous for now. 20% CAGR for the next 4 to 5 years. So that's going to be the estimate, and revenue is also expected to grow from $6.4 billion to over $8.8 billion, right? That's going to be the expectations from a revenue standpoint, from a sales standpoint for this company. Now, if we plug in some of these numbers, so let's just do 20% in growth for this company, right? So 20% is going to be that growth. And discount rate is going to stay the same at 12%, 10% margin of safety. The company's been buying back shares. As I showed you guys previously, they've been buying back, consistently over the last several years. So we're going to do 0.5%, negative 0.5%, meaning that they are going to be buying back shares in a very small amount. Then the P multiple, right? This right here is very, very high, unfortunately, for the company right now, 46 to 45, which is, in my opinion, very, very overvalued. And even their sector is trading at roughly 19 to 22, and their growth rate for the next 4 to 5 years is 20%. So I'm going to go with 20% to keep that PEG ratio intact at around 1, right? So that's going to be the PEG ratio at 1, and the fair value ends up at $62 for this stock. And right now, this company is trading at $105 per share, which means that it would need to drop another 40% in order for this to be a very, very good deal for us with the future growth priced in. So I think everything lines up really well. This is a phenomenal, fantastic business. I mean, the stock has proven itself. The company's done really well, but unfortunately, the valuation is a little too high for my personal risk tolerance. And if it does drop, 30 to 40%, I would be very much interested in this company. Now, time for the reveal. The company that we are talking about today, the stock that we are talking about that's outperformed the S&P, the NASDAQ, Apple, Tesla, Nvidia, Enphase in the last 20 years, has gone up over 350,000%, is going to be none other than Monster Beverage Corporation, and that is going to be ticker symbol MNST. And if you take a look at their monthly chart, they just hit a new all-time high yesterday. at over $105. So I figured, just do a video on them because they're one of the very few stocks that's actually trading at an all-time high. And if you take a look at how well they've done since 1996, when they were trading at literally 1 cent, 2 cent, they've gone up, an enormous amount, like just an insane amount. They've gone up from those levels, and most of that growth came in since 2003 to 2006 when they rallied, almost 10,000%. And I was actually surprised to learn that Monster Beverages has been around for such a long time. Didn't think that they've been around for that long, but apparently they have been. And of course, there's a lot of drinks that they serve. I've tried Monster Beverages myself, but I no longer drink any of these energy drinks because of health reasons, and I will go over that as well. But this seems to be a very, very well-run company. Now, they have sponsorships with NASCAR, UFC. We've got, Supercross. We got MotoGP, like a lot of big sponsored names. And of course, not to mention Tiger Woods. We got Lewis Hamilton. We got Gronkowski, Chloe Kim. We got Ken Block. There's a lot of people that are ambassadors with Monster as well. So their marketing's been on point. And this right here, of course, Monster's U.S. innovation. This right here is going to be the beverage landscape. And you can see where majority of the revenue is coming from. Sparkling soft drinks to water to juice drinks, energy drinks, sports drinks, tea, coffee, whatnot. They've got, all types of drinks out there. And they are in 142 countries and territories, 63 countries and territories strategic brands are. And they're affordable energy, 34 countries and territories worldwide. One or more of the company's energy drinks are distributed in a total 157 countries and territories worldwide as well. So they've got a pretty significant reach when it comes to the overall business. Now, what I also noticed was that this has been kind of like a significant, you can call it like a monthly divergence that's been playing out since 2006. So it's been like over 17, 18 years where this stock or this company has just been climbing higher, but the rate at which it's going higher is obviously slowing down as the numbers are getting bigger and bigger, right? So Monster Beverage, right now the market cap's at $54 billion, and there is a pretty dramatic divergence here for the RSI with the MACD as well. And as I've already pointed out, I think this is one of the best businesses out there because number one, you've got a very strong brand. You've got consistently growing revenues and profits and margins and earnings and whatnot. Like the financials are phenomenal. Balance sheet is excellent. I mean, there's no solvency risk at all. And then at the same time, you've got share buybacks and you've got the stock price momentum coming in and just everything looks great. The only thing that doesn't look great is a valuation, right? Are people really paying $105 for this business right now when the earnings growth is expected at 20% over the next 4 years and the sector median is also a lot lower? That's the real question. And for me, $105 really doesn't make any sense for this company right now. So if and when it does drop like 30 to 40%, I would be a lot more interested in the low 60s. In fact, it was trading at that level back in March of 2022. And you know what's even interesting is that this company didn't really have that much of a decline compared to some of the other stocks that we saw. Like if you go over to the weekly chart, this is quite an interesting sort of stock here because even during the pandemic, if you take a look at March 2020, the most the stock went down was 25 to 30%. That's it. That's actually a little bit less than what the S&P 500 did. And of course, the NASDAQ during that time, I believe was down a lot more. The NASDAQ was down a little bit over 33%. So Monster Beverage is just, it's crazy how well it holds up during bad times and how good it does during good times. So this is a stock that's definitely caught my attention, but obviously at a much lower valuation and a price. So hope you guys enjoyed this video. Just wanted to kind of bring this to your attention, go over this company that has performed really well, and let me know your thoughts. And if you were able to guess this company before my reveal here, be honest. I want to hear in the comment section down below. As always, if you enjoyed this video, find it helpful, make sure that you drop a like, subscribe if you're new. From a technical standpoint, really what we're looking for is a support down here in the $85 range. Right now, it does seem like it's been consolidating sideways a little bit, but again, a new all-time high coming in yesterday for Monster Beverages. And really that support where I would be very interested in buying is going to be closer to like low 70s to as low as like mid 60s for this company. As always, happy investing. I'll see you all in the next video.